Hey everyone, Couch Investor back to another video for today, and to be honest, I did not expect to cover this company again on this channel. If you are really an OG of this channel, you know that, well, one of the first companies that I covered on the channel are cruise companies and casino companies, because maybe you remember, maybe you don't, but back then, well, those companies were taking a hit, a very big hit when the company, well, obviously started, since they had to shut down, cannot go on a cruise anymore, cannot enter a casino anymore either. But somehow the prices of these stocks, well, skyrocketed in just a matter of weeks. For example, Royal Caribbean, Carnival was, I think, at $8, $9, then suddenly in a matter of weeks, well, at $20, $24. Royal Caribbean, again, same thing, $40, soared up until, I think, $80, $90 or something like that. The price today is back to where it was back in April, March of 2020. Now, you might say, does this mean this is maybe an option or maybe a good time to buy such companies? Well, let's have a look in this video. But before we do so, if you want to support this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor and make sure to check out all the other links in the pinned comment. So first things first, when it comes to Royal Caribbean, maybe you've heard about it, maybe you haven't, so let me share it with you. So not so long ago, Royal Caribbean Group has announced that it will use SpaceX Starlink in an industry first to provide high-speed internet on board full cruise fleets. This will happen in the first quarter of 2023. It's a very nice thing to have. Now, when you look at Royal Caribbean, we'll have a look at a couple of things from the latest quarter, but this is just the major overview. Obviously, it's not a company that will grow revenue 50% year over year. Far from it, and you can see it actually before the pandemic started. Revenues were pretty flat, let's say, and then, well, it just went down. Now we're back trending up. Free cash flow was positive. We're now still negative. They're making their way up, but still a long way to go. Same with return on equity. Drawdown from its peak is at 69%, and gross profit margin is almost at break even, which is a very big improvement. Now, with companies like Royal Caribbean, Norwegian Cruise Lines, and Carnival, my favorite was always Carnival. It also paid out a nice little dividend. Obviously, right now, none of these companies pay a dividend because they still have to pay off their debt, which is something that will take a while, and this is why Royal Caribbean Group announced closing of $1.25 billion senior unsecured notes offering to refinance near-term debt maturities, which basically means that they are raising money to pay off a debt because they raised money before. But right now, this is costing them obviously much more. More specifically, 11.62%, which is much higher than the rate they got before, which was, I think, between 2 to 4% or so, an average. So a big hit there, and it's not like the company is profitable right now. So yes, they're raising money to pay off their previous debt, but what will happen with this 1.25 billion? They'll have to pay that again at a higher rate, and right now, not very profitable. It will take a while.
How long is this going to take?
Well, let's have a look at their recent earnings. So in June, the group completed the return of its global fleet to operations across key destinations. About time, but that's good to hear. Load factors in the second quarter were 82% overall, with June sailing reaching almost 90%. The higher the number, the better. Based on the continued strength in consumer demand, the company expects load factors will average approximately 95% in the third quarter and increase to triple digits by year end. This will obviously improve the company's financials as well. Booking volumes received in the second quarter for the back half of 2022 sailings remained significantly higher than booking volumes received in the second quarter of 2019. Obviously, there's no reason to compare 2020 or 2021, so we go back to before the pandemic. And again, these numbers look quite good. The second half of 2022 is booked below historical ranges, but at higher prices than 2019, with and without future cruise credits. And this is also extremely important because, Well, since 2019, a lot of prices have gone up for the cruises company and for the passengers. For the cruise companies, well, obviously staff, electricity, energy, fuel has increased significantly. And then for the passengers, well, life has just become very, very expensive. They continue here by saying that for 2023, all quarters are currently booked within historical ranges at record pricing for the third quarter of 2022, and based on current currency exchange rates, fuel rates, and interest rates, the company expects to generate approximately $2.9 to $3 billion in total revenue, adjusted EBITDA of $700 to $750 million, that's positive, and adjusted earnings per share of 5 to 25 cents. Now, to repay a debt, you need profitability, you need cash flow, you need, well, net income. Right now, the company reported net loss for the second quarter of $500 million or negative $2.05 per share, which, then again, granted, is much better than the year before, where net loss was $1.3 billion or $5.29 loss per share. Now, while this improves, we have to talk obviously about fuel expense. So they say here bunker pricing net of hedging for the second quarter was $721 per metric ton, and consumption was 382,000 metric tons. As of the date of this release, fuel consumption is 56% hedged via swaps for the remainder of 2022 and 36% hedged for 2023 below market prices. For the remainder of 2022 and all of 2023, the annual average cost per metric ton of the fuel swap portfolio is approximately $473 and $575 respectively. And this is obviously something they mentioned for the third quarter outlook. The group expects net loss in the second half of 2022 due to increases in fuel rates, interest rates, foreign exchange rates. Based on current currency exchange rates, fuel rates, and interest rates, the group expects adjusted earnings per share for the third quarter, as we said, 5 to 25 cents. And so to conclude, I mean, it's been one hell of a ride if you've been holding cruise stocks for the last 2 years. I'm actually very surprised if any of my viewers have held cruise stocks for this long. If you did, obviously do let me know down in the comments below. But looking at the cruise ship, right, it's everything you need in a vacation. Everything is on the ship. You never really need to go off the boat unless you want to go visit some places, of course. But other than that, it's really a type of luxury vacation, but at an okay price. Obviously, depends on where you're going, but overall, for the value that you get, I do think that cruise vacations will always be successful. Now, with everything going up in price, right now in the short term, let's say in the next 6 to 12 months, remains to be seen how every industry will get affected, especially travel industry. Now, this summer was insane, right? If you've been to the airport, you know that the lines are super, super long. People are losing luggages, flights getting canceled. That's because too many people want to fly, want to go on vacation. Not that many people want to work. Let's see what happens with cruise ships. Right now, I'm not touching any cruise ship stock. But if financials become better and if, let's say, I don't know in how many years, they pay dividends again, maybe, just maybe, it might be something interesting. Obviously, do share your thoughts down in the comments below. Check out the link down in the description in the pinned comment if you want to support me. And I'll see you all in the next one. Bye-bye.